Have you ever wondered how Bitcoin halving impacts investors? Do you know how to prepare for this potentially crypto landscape-altering event? In this video, we're going to discuss 4 strategies on how you can prepare for the upcoming Bitcoin halving in 2024. Welcome to Money Funnel, your ultimate gateway to financial empowerment. Get inspired, get motivated, and learn the path to true wealth so you can live the good life. Please help us grow this channel by subscribing now. Don't forget to hit that like and notification bell for more financial tip videos. Before we get to the 4 strategies, let's have a brief overview of the halving event first. Bitcoin halving is an event that happens approximately every 4 years, cutting the reward for mining new blocks in half. This is a key aspect of Bitcoin's design, intended to control the digital currency's inflation rate. Bitcoin halving has significant implications for the cryptocurrency market. It reduces the rate at which new coins are generated, which can result in increased demand if the supply can't keep up. This potential scarcity can drive up Bitcoin's price, making it a potentially lucrative event for investors. But it's not all about supply and demand. Bitcoin halving also shines a spotlight on the cryptocurrency market, stimulating discussion, generating media coverage, and attracting new investors. These factors can further fuel price increases, creating a ripple effect of opportunities. Now that you understand the significance of Bitcoin halving, let's discover some strategies investors can use to prepare for it. Our first strategy involves a commonly used investment technique known as dollar-cost averaging. Let's break it down. Imagine you're buying a fixed amount of Bitcoin regularly, say every month. You're not concerned about the current price. Some months Bitcoin's price may be high, so you'll get less of it. Other months, when Bitcoin's price drops, your fixed amount will buy you more. Over time, this strategy can result in a lower average cost per coin. Why? Because you're consistently investing the same amount of money. You're not trying to time the market or predict Bitcoin's price swings. Instead, you're spreading out your purchases and potentially reducing the risk of buying at a high point. This is the essence of dollar-cost averaging. It's a strategy that takes advantage of Bitcoin's volatility without getting caught up in the day-to-day fluctuations. Dollar-cost averaging is a strategy designed to reduce the impact of volatility. It's a smart move for those who prefer a more conservative approach. The second strategy to consider is diversifying your portfolio by investing in altcoins. Altcoins, or alternative coins, refer to all cryptocurrencies that aren't Bitcoin. They offer a world of potential benefits to savvy investors. The key is to understand that as Bitcoin's price rises, it often pulls up the value of altcoins in its wake, like a powerful tide lifting all boats. However, it's not all smooth sailing. Each altcoin has its own unique characteristics and risks. Some are backed by robust technology and have a strong user base, while others might not be as secure or have as much potential for growth. That's why it's crucial to do your homework before you dive in. Research each altcoin you're considering, understand its technology, and gauge its potential for success. Investing in altcoins can be a great way to spread risk and potentially capitalize on the Bitcoin halving. It's about finding the right balance and making informed decisions. The third strategy we'll discuss is long-term holding, often referred to as hodling. You might be wondering, what's with the peculiar term? Well, hodl is actually a crypto slang that originated from a typo for hold. It's come to represent a steadfast approach to cryptocurrency investment, buying and holding onto Bitcoin for the long haul, rain or shine. Now, hodling is not for the faint of heart. It requires a significant amount of patience and ironclad discipline. Why? Because the value of Bitcoin, like any other investment, can fluctuate wildly. And in those moments of steep decline, it's easy to panic and sell. But here's the catch. Investors who have hodled through the highs and lows have often seen substantial returns. Why? Because despite the short-term volatility, Bitcoin has shown a consistent upward trend over the years. So, if you believe in the long-term potential of Bitcoin and can stomach the roller coaster ride, hodling might be your game. Remember, hodling is a marathon, not a sprint. It's about the bigger picture and long-term gains. The fourth strategy is to study past trends. This means you need to conduct thorough research on the historical trends surrounding previous Bitcoin halving events. Analyze the market behavior before and after these events to gain insights into potential price fluctuations and market sentiments. Try to determine what are the price movement of Bitcoin few months before the halving to few weeks before the halving, and see if you can spot some notable trends. Did the price dip before the halving, or did it continue up in a steady trajectory? These types of insights will give you some guidance on the good time to buy or sell, depending on your short and long-term strategy. What about after the halving? What was Bitcoin's price? Did it continue to increase, and for how long? How did the market react? Studying the historical trends surrounding the past halving events is a key strategy that can put you in a position to get on the right moment and opportunity. So there you have it, 4 actionable strategies for preparing for the Bitcoin halving. Firstly, dollar cost averaging, a tried and tested approach, can be your ally in navigating the volatile waters of cryptocurrency. By spreading your purchases over regular intervals, you can potentially mitigate the impact of short-term price fluctuations. Next, consider diversifying your portfolio with altcoins. As the Bitcoin price soars, other cryptocurrencies might follow suit, offering you a chance to capitalize on their growth. Third is, long-term holding, or hodling as it's known in the crypto community, can be another viable strategy. Remember, Bitcoin's value has repeatedly proven to increase in the long run, despite short-term turbulence. Last but not least is to study past trends surrounding the halving event. But let's not forget the importance of doing your own research, understanding your risk tolerance, and making informed decisions. Cryptocurrency, with all its potential, is still a high-risk investment arena. While the Bitcoin halving can create opportunities, remember that investing in cryptocurrency always carries risk. Stay informed, stay prepared, and happy investing. To learn more financial tips, watch the next video recommended by YouTube here. Thanks for watching.